Okay, all right. So was having some issue with the my mic system and my camera. That's fine. Let's start again and let's see what's going on. So first of all, let me drop this link also in the X or so-called Twitter, so all the students should join and should see how it goes. Was having some issue with the first of all, let me grab this link, copy, paste it over here. X or so-called Twitter, so all the students should join. Okay, so yeah, it's perfectly fine, and I should take this link also to my Discord, so all the Discord students should also join the webby. Yeah, it's good, seems sweet, and I think so I should copy this one and post over here. Yeah, now it's fine. Okay, so how is it going, guys? First time the voice was, there was a quite good problem regarding for voice and so fun stuff. That's fine, we'll not give any shit to that fun stuff. That's fine. So let's start. Let me double check all the things fine. Yeah, it's fine. So feel free to drop if you have any question regarding to markets or regarding to the other risk management perspective or any other shit, right? So first of all, let's start from Bitcoin. Let's start from Bitcoin and let's see how it goes. So starting Bitcoin from higher perspective, and already did a small live, but the live was, there was small bugs on the live. That's fine. Let's start again. So Bitcoin, starting from Bitcoin, first of all, in this quite good webinar, first of all we will discuss Bitcoin, then we will discuss some major alts, and then at last we will discuss risk management. And if you have any problem within that system, you can drop it down on chat session. That's it, and let's start. Starting from higher time frame, Bitcoin is still in a good bearish push from 1-day time frame, making this high and this low. So if the price is making this high and this low, it means that no, price is in a bearish structure. What we have to do, we have to combine some higher to lower time frame, and let's see, still the market is bearish on lot, right? So I already dropped a detailed video on Bitcoin on my YouTube and also on X, so you can also check out there in detail. I had discussed the fun stuff there, but in short there I will also discuss, because the live webinar, so Bitcoin should be discussed in this webinar. That's it. So from higher time frame, 1-day time frame structure is still bearish, but now what we have to do, we have to combine the time frame from higher to lower perspective, and then we have to make a context for ourselves, and within that context, if the structure is bullish, then we will go for bullish structure, and if the structure is bearish, then we have to go for bearish structure. So according to 1-day time frame, the structure is completely bearish, and we got the first break of structure downside over here, we got the second break of structure, and we got the third break of structure. Now same thing according to 1-day time frame and 12-hour time frame, the structure is bullish and bearish, martingale between, and finally we got the bearish push. So 12-hour time frame, we got the overextension. I already discussed my previous video update also on Bitcoin, but in short, what is an overextension? According to 12-hour time frame, the structure is now completely overextended, right? So any move more than 3, or regarding with also 3, will count the 3 break of structure in a specific direction, will act as a we can call it a overextension. So if the market is now overextended, so what we have to do, what the institutions basically do, according to the real smart money perspective, the institution take the price towards highs, and if the overall structure of market is bullish, then they will complete their long orders over here on these demands or in this MA also, and then they take their price in its direction, right? So according to the overextension methodology, this is the overextension methodology, then in a specific direction, if we got 3 or more than 3 pushes, then most likely price is gonna liquidate the high, and if the overall structure is already bullish, then the price will take the price to next highs, right? So the same fun stuff is happening over here now currently, that we got the first break of structure, second and third break of structure. Now what's funny over here, that the last one is not the last break of structure haven't mitigated this supply zone and got the candle body closing below this low. This leads to the overextension market. So according to overextension market, the price is now gonna take the highs, but it's not necessary that always after three pushes the price will get and price will make its highs, right? So that's why we have to go for 4 time frame down push. Let's see how it goes. According to 4 time frame, first, second, third, fourth, fifth break of structure, 5 break of structures we got over here, and now the same thing, 3 or more than 3 break of structure in a specific trend cause a overextension market, and it performed very well. That price moved upside like this, liquidating all the short ones from here by those who were supposed to go for short direction from this supply, as they were counting for this high and this low as a structure zone. Now they have to go for short direction, but they were wrecked over here because of the overextension methodology. That's perfectly fine. That's how the beauty of the real smart money is. Now 4 time frame, completely structure is bullish. We got this demand also over here, and price is now currently following this 100 EMA push also. That's fine, but now what we have to do, we have to account for 12 hour time frame also. Why? Because according to the 1 day time frame and 12 hour time frame, both are bearish, but at least the 4 time frame we got an initial push upside. That's good. But now from where the complete structure will be shifted bullish, and from where the institutions will completely go take the price towards long side and will go towards the long direction, that zone is basically this 99k. Let me get rid of this one. Yeah, 99,400 is the best zone for those who want to take a safe trade for long direction, because 12 hour time frame is completely bearish yet, and it will shift bullish when the 99,400 breaks. Now if the 99,000 breaks, then on the retracement, if we got hope so we'll get the retracement also, then the price will completely move upside and will take the new highs. Why? Because this market is currently as a is on a redistribution model, or on a distribution model, and if we got a break of structure upside from this 99,400, then this redistribution or so-called distribution market will be completely shifted towards the accumulation. But this scenario is not currently happening over here. So that's why what we have to do, still the market is getting initial push upside, and this news was all this push was also due to some news, I think so, yeah. And complete structure will be shifted bullish after this 99,400. Then what we have to do currently, as suppose we are not gonna long the market yet, but we will long the market on with high amount, with high liquidity, if the price breaks this 99,400 with a candle body closing, and on a small retracement, the retracement can be 50% of the impulse move, or the retracement can be a 60%, 70%, who knows, but after some confirmation we will go for long direction. So that is Bitcoin. Currently the price is not completely in a long direction, right? So let me get rid of this one also, because this is now not happening. Now we need a candle body closing above this one, then on retracement we can buy, or we can long the price to take the highs. So that's it. That's a quite good Bitcoin, going for long when the price breaks the structure of 99,000. Till that, shorts are in handy and longs will be somehow risky, right? So Bitcoin, this was it. Bitcoin is completely breakdown over here. Now let's move towards the USDT dominance. Let's see how it goes. Let me get rid of this one. Let's see how it goes from higher perspective. Okay, the structure was completely, according to 3 time frame, bearish like this, from this high to this low, like this low, and price absorbed the low and moved upside. What we have to do, we have to see the overall structure of market is quite good, extremely bullish. But 1 day time frame, according to 1 day time frame, the structure is completely shifted bullish. From here we got the first break of structure, we got the second break of structure also over here by making this low and this high. Now guess what, when the US dollars dominance was bullish, the Bitcoin was bearish, and when the US dollar dominance was bearish, the Bitcoin was moved bullish direction. So they are just oppositely correlated markets. So according to this, the structure is completely bullish. You can clearly see over here price is making this demand also, and from here we have also pushed towards this 200 EMA, but we haven't got a CS over here. So it means that what we can expect that if the price give us a CS over here like this, then this market will be completely move upside and the Bitcoin will completely go downside. But according to this US dollars analysis, the structure is completely bullish for now, but we need time frames also, like 12 time frames also bullish, and 4 time frame I think so on a reaccumulation model. So this is a kind of reaccumulation model. What we can expect now, we can expect that the price can give us a down move like this, and then if we got a candle body closing below this one 4-hour time frame, this 4-hour 200 EMA will be a good response for us for going for long direction. So it means that if this is a bullish market, then Bitcoin should shift bearish, right? So according to that, the analysis of Bitcoin will be more strong. Why? Because still the structure of Bitcoin haven't shifted bullish yet, like the 99,000, or if I move towards the bigger chart like this. Yeah, it's fine, no problem. If the structure of this one shift bullish, then obviously the USDT dominance will be dropped down, but currently this is not happening the case. So that's why we can expect more drop in a Bitcoin from the US dollar perspective dominance. So according to this one, the structure is completely bullish, so it can go upside. That's why we are currently not involved in any long on Bitcoin until the 99k of 99,400 does not breaks, right? So if the 99,000 breaks, so if I correlate these two markets like this, and if I get the Bitcoin also over here, yeah, so over here we have this both correlated markets. You can see perfectly that when the price was going down, the US dollar's dominance was moving upside, and when the Bitcoin was moving up, the US dollar dominance was coming downside. And now currently it's opposite completely, both are. So we can expect that until this protected high is not broke with a candle body closing, the structures are still bearish. Why? From this analysis of US dollar dominance can clear us that the structure and the Bitcoin is not completely yet bullish. So it's still we can expect some more downfall until this high does not breaks, right? So still on US dollar dominance, I'm long currently. It can move upside, so Bitcoin will be completely, it can go down until this high is protected, right? So these two markets make some sense. Both are oppositely correlated and working perfectly fine, are working in tandem with each other. So yeah, US dollars dominance is this structure. According to structure longs are perfectly fine. So let's, and yeah, we have the burger also on, we discussed the burger on my YouTube video also. Let me show you there. YouTube, yeah, on the videos we have this burger bull run update. You can check out this one completely, because I'm not gonna do a complete trade breakdown on burger over here also, because this will be useless. For that, you can check out there also. This video is perfectly fine. And if you want to learn some good real smart money perspective fun stuff, then this burger US dollar update and this Bitcoin update will guide you a lot, right? So yeah, burger, we were expecting bullish on burger, and it currently recently it mitigate this entry zone. Now what we can expect, we can expect a sudden move, or not a sudden move. If the price wants to move up, it can move with a low liquidity also, it can move with high liquidity also. That's perfectly fine. But we can expect, and it's higher a higher chance for this burger to move higher direction. Why? Because of the overall accumulation market, overall the redistribution market was just completely shifted towards the reaccumulation market. So that's why we will expect we can expect a huge move in burger US dollars for the long directions, right? So this was burger. Still, if anyone is not In burger you can take a burger on spot also, but yeah, 29% stop loss, it should be on spot if you don't know how to calculate your risk management prospective fun stuff. So I will also discuss the risk management also here, but burger is completely fine for longs, you can check out, right? So okay, so you can take a screenshot, entry stop loss is clearly visible over here. And currently red market is also so much on top gainer. Let's see what's going on red, and after that we will discuss the risk management fun stuff. So red is currently newborn coin, so it means that there is nothing and it should be avoided, right? So because there's no market data according to the smart money perspective, that if there is no data then we can't analyze the market. So red is shit. Okay, so at the end let's start risk management fun stuff, and after calculating the risk management we will just cut off and let's see how it goes. So I already dropped this risk management fun stuff over here also way ago, but still most of my students have no idea about the risk management. That's why I decided to discuss it on live webinar. It will be perfectly fine. So risk management is, you can say the risk management as a backbone of the profitability. Why? Because if according to the, if your analysis is perfectly fine, if your strategy, you are a systematic trader, but if you don't have any knowledge about risk management and how much money we should risk in a specific trade and how much money we should be on a sideline, that's it. So risk management, to calculate risk management, there's a simple formula, but before going towards the formula, the risk management is used for a specific way. Why? Because if any systematic trader has a win rate of 70%, 60%, 50%, it does not matter. But if he calculate the risk management in a correct manner, so with the passage of time, he will be in profit. Yeah, of course. So risk management is so important. If risk management is just like this, if you want to risk $100 per trade, okay, so invest and risk are two more different things. I'm talking about the risking. If you want to risk 1% of your portfolio, this may be $100, this may be $1, this may be $10, this may be $1,000, and this can be also a $10,000 risk as a 1%. So this is through the lens of risk management, we can see how, and by calculating a formula we can we can use a fun stuff through which we can get a exact loss, $100, $1,000, $1 on a stop loss. That's why risk management is so important. So to calculate a risk management, we have a quite good formula. The formula is risk in dollars, right, divided by entry minus stop loss. It means that, let's have a quite good example also, entry minus SL, and have that on division side. Let me have profile. I was having a quite good yeah, let me give you an example. Yeah, we can calculate the risk of burger also. Let's calculate the burger risk management wise, and this will be helpful. Okay, so according to the rule, according to formula, what is the formula? Risk in dollars divided by entry minus stop loss. So first of all, you have to calculate your entry minus stop loss according to your BODMAS rule, right? So entry minus stop loss, there will be a value, then simple divide the dollar risk by this value, the answer will be in front of you. So let's discuss and let's have a practical like this. Calculator, 0.3549 is my entry. What you have to do, minus stop loss 0.2483, there will be a value. So what you have to do, this value is overall result of entry minus stop loss. Now simple, you have to copy this one and the dollars that you want to risk in a specific trade. So if you want to risk 2%, 3% of your trade in a specific 2 or 3% of your account in a specific trade, so what you have to do, just write that amount of risk in dollars. This can be $100 for the sake of clarity. Let's get towards the $100. If you want to risk $100 on this specific trade, so what you have to do, just 100 divided by this answer, and there will be answer which will be 3938. What you have to do, you have to copy this one. This is now your position size according to the burger US dollar, right? So what you have to do, you have to come on any exchange. What you have to do, exchange can be anything, but you have to, if there are market updates, so market order, so just put a market order on the quantity purpose. On the quantity section you have to mark that value. So that was burger. I think so it's not on, yeah, sadly it's not on Byte. You can go in any other exchange also and just write it down over here. The answer was 938, and make sure to have this on your quantity section, right? So quantity unit must be there, because if you have a US dollar selected already, then your risk management will be completely, your position size which you have calculated will be completely wrong. Why? Because you have calculated the position size on the basis of the market coin, right? So that's why you have to be on this Bitcoin, and in this case it was burger. So unfortunately burger is not on Byte. That's perfectly fine, but according to the quantity, you have to write simple the answer over here, and on the loss, on the SL, you will get a $100 loss, right? So that is how risk management can be calculated, or position size can be calculated. So I think so that's it. That's perfectly fine. Hope so this webinar made some good sense regarding towards the risk management, Bitcoin and burger, and the opposite correlation between the US dominance and Bitcoin, right? So that's it for today.